Hello everyone and welcome back to this last week on Wall Street, the show where I break down some of the biggest stories in the world of finance. It truly feels like we're living in a movie right now with everything that is going on in politics, in business, in society as a whole. So we have quite a bit to cover this week. Let's get into it. So this is what we're going to be diving into today. First, we're going to talk about the elephant in the room, and that is Biden stepping out of the presidential race. Then we have some good news on the inflationary side with the latest CPI readings. Then we have some news in the hedge fund world with the launch of Jain Global. Then, of course, we need to talk about Microsoft and Crowdstrike and what went wrong last week. And finally, we're going to dive into some recent news about Tesla. But before that, let's talk about Biden. So just yesterday, July 21st, Biden dropped out of the race. He posted this letter on X, which is, first of all, a huge win for Elon Musk. It's crazy to think that, something as substantial and historic as dropping out of a presidential race, the first place they go is Twitter. And, I think that is a big testament to all the people saying, oh, Twitter's going way too far right, whatever people may think. It is the town square of the internet, and I think this proved that. So that happened yesterday afternoon. While stepping out, of course, mental fitness was a concern. The polling numbers did not show or did not look favorably in terms of Biden's chances against Trump, especially in the wake of Trump's assassination attempt. So a lot of Democrats were calling on Biden to drop out, which he did finally on Sunday after tons of pressure. In doing so, he endorsed his current VP, Kamala Harris, for president. But just because he endorsed her does not mean that it's over. She does gain access to all of Biden's campaign, which means that she gets, most importantly, his funds, because that is a huge aspect. There's a lot of campaign finance laws about that, but there is still a lot that is left to be decided. Others can still seek nomination, and Harris is by no means the final person. There would be some ethical concerns because technically she hasn't ever been elected. She hasn't had anyone vote for her ever. And, she was in the presidential race in 2020 before she had finally conceded to Biden. So she really does not deserve to be here. I'm not saying that she can't get to that point at some point, but there does need to be a democratic process to go through with this. She needs to get the votes. So that is what is happening in the future. It is tough timing because, like it says here, they would have to set up a campaign 3 months before the election. And of course, there's a limited access to fundraising. There's just not that much time. But people need to figure this out soon because the Democratic National Convention is August 19th, and that is where the Democrats will gather in Chicago and vote for the presidential nominee. So if there will be some opposition to Kamala, we will just have to wait and see. Currently, the prediction markets have Trump winning at about 60%. I'm not sure how much this has fluctuated since all this has happened. But in terms of finance, policies with Trump include more tariffs and potentially higher inflation due to easier business policies. There is, some debate there in terms of what is good for the long run, and I think we will see that play out. But Trump did make a huge move in terms of the business world, the business environment. He elected former VC JD Vance as his vice president for this run. JD was a venture capitalist with Peter Thiel. He had some huge big name investors at his own fund where he was a partner before becoming senator of the state of Ohio just a few years ago. So that was a huge move that was applauded by a lot of VCs. Elon Musk, the people from the All In podcast, they were happy to see that news. But now diving into the US CPI. So this just came out. The CPI was negative 0.1% month over month for June, which means it actually went down. It took me a second to get that because I feel like I'm used to seeing the other way around. So this means that it beat the expectation for the month over month change. The core CPI month over month was 0.1% versus the 0.2% expectations. This slowdown in price was broad-based, so it means it aligns with the Fed's goals. If you remember, obviously the Fed is trying to bring inflation down, and they're trying to wait to see honestly a worse economy before they bring rates down, because there's a lot of kind of domino effects here, but this is a good sign in terms of bringing down the federal funds rates, which a lot of people are looking for, especially if you're looking to buy a home or make any large purchases. So shelter inflation, speaking of homes, is easing as rents for new housing units has slowed for the last year and a half. The first 3 months of 24 were increasing inflation, but these last 3 months have been decreasing, and it has been decreasing at a very slow rate, which is what the Fed is wanting. So it is looking good. Because of that, the markets are pricing a 90% chance of a rate cut in September, but all eyes will be on the labor market, as further cooling would be undesirable. Obviously, you don't want it to cool too much, and then all of a sudden you have huge unemployment. That would not be very good. Now, going into the hedge fund space, we have the launch of Jain Global. This is the largest hedge fund launched since 2018, and it is headed by Bobby Jain, who was the prior co-CIO at Millennium, which is one of the largest hedge funds in the world. There at Millennium, he drove strategies and risk controls, and he originally targeted $10 billion for this new fund, but because of kind of the tough fundraising environment, he ended up with just $5.3 billion. I shouldn't even say just, that's pretty major, but still short of his goals. Jain Global is a multi-strategy firm, which means that Jain will hire and oversee numerous portfolio managers who execute their own decisions and strategies under one umbrella. They already started with 150 employees on July 1st. So multi-strategy just means they're doing a lot of different things. They're trying to see what sticks, basically. Whereas some hedge funds are all in on one certain investment strategy. Multi-strategy are multiple strategies. And the idea is that they can still generate significant alpha that beats the market and beats other investors. So the growth considerations for this are important, though, because the complexity of a multi-strategy fund, along with just the already existing competition like Citadel, first-year returns are absolutely crucial to attract future capital for the fund. If I'm a high net worth individual, why do I want to go with Jain, invest my $10 million there if I can go elsewhere and make, a 1% difference on $10 million is pretty substantial. So competition from higher rates in asset classes like private credit do make it tougher for newer funds to increase AUM, especially when they're first starting out. And you can see here, these are just their strategies. So fundamental equity, arbitrage, commodities, rates, quant, credit. There's a lot going on there, but this is big news because it's been 6 years since there's been a larger fund launch. Now, going into something that quickly became a meme on Friday and over the weekend, I unfortunately was still working. Only certain parts of my job were down, but it is the Microsoft and Crowdstrike outage. So Crowdstrike, which is a major cybersecurity firm, they experienced a major outage due to a botched software update, disrupting access to its Falcon platform and leaving customers vulnerable to cyber threats. This incident marked the worst day for its stock since November 2022 and was deemed the largest outage of all time. Short sellers, of course, saw some significant gains as the company's stock price plummeted, reflecting investor concerns over its operational reliability. This definitely creates some red flags because this was a pretty substantial issue that affected so much. My girlfriend was traveling, travel plans were delayed. Everything from I couldn't do an online order for my Starbucks. The effects of this seem to be everywhere. And the event underscores the critical importance of robust IT infrastructure and risk management in the tech and cybersecurity sectors. Such incidents can erode investor confidence, increase market volatility, and highlight the need for ongoing investment in cybersecurity resilience. So basically, no one is invincible. As good and strong you think your cybersecurity is, there are always interns there to mess it up. Just kidding. I don't know that it's an intern, but they were just trying to do an update. This was not a hack. That is the good news, is it wasn't a hack. It was just a faulty update, a bug in the updated software. And so, caused several $1 billion of damage globally, but everyone makes mistakes. And with that, we're going to talk about Tesla. So is Tesla stock a buy? That's what everybody wants to know. Tesla's Q2 2024 earnings and revenue did not meet the analysts' expectations. The company reported earnings of 78 cents a share, which is short of the 82 cents that was estimated. The shortfall was attributed to increased costs and pricing pressures. The broader electric vehicle market is experiencing slower growth, with US sales growing by only 2.6% year over year in Q1, down from 46% growth in the same quarter last year. That is a pretty substantial difference. This market deceleration, coupled with Tesla's missed earnings, led to a decline in Tesla's stock price over the week. And it seems like it's either up 5% in the day or down 5%. So it's definitely pretty volatile. And the reason for that is that Tesla's share of the US electric vehicle market fell below 50% for the first time ever, dropping to 49.7% in Q2 2024. This decline was due to increased competition from brands like Ford, Kia, and BMW, which are gaining ground with new and popular electric vehicle models. Now, obviously, some of those are more of the affordable models. You see competitors that are more high-end, like Rivian or Fisker, back when that was a thing. And so there are some of those more premium electric vehicles, but the issue for Tesla now is if Ford, Kia, Toyota, some of the brands that are known for making quality cars at an affordable price, if they can come in, take away some of that edge that Tesla has in the market, that is where the issue is. The issue isn't with the cars that are costing $200,000. It's with the cars that the everyday man can purchase. And so we will certainly see where it goes from here, but Tesla has been still doing well this year, relatively speaking. And so it is still a mega cap company, but Elon's got his focuses elsewhere. You know, he's got Twitter doing its thing, or I should say X. So we will see how that all plays out. But with that said, I really hope you enjoyed watching this video. As always, if you have any questions at all, feel free to reach out to me on LinkedIn. Happy to help. I can't wait to see what's in store for this next week. If it's anything like the last, it is certainly going to be a big one. I shouldn't say a good one, but a big one. I definitely look forward to my kids taking AP US history down the road and getting to tell them stories about where I was in July of 24. And I'm grateful to have you all along for the ride here with me. So with that, I'll see you in the next one. Peace.